Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space.
All right, we're back for another episode of the Mortgage Broker Podcast. I'm Dean Lawton and co-hosted today with Jason Marshall. We're very excited today for another Behind the Lender series and our first repeat guest, Christine Perkins from Sequence Capital. And this episode's going to be a little bit different than our typical Behind the Lender series. We're going to be getting into the private lending playbook. Christine has a long career in the private lending space, and we're going to be discussing how brokers win deals in today's market. For those of you that want to get the full behind the scenes on a typical Behind the Lender series that we hosted with Sequence in the past, episode 32, we actually sat down with not only Christine, but also Arif, and we went into the history, the origin of Sequence, both Christine and Arif's careers. We touched on that. So a lot of good stuff, a lot of different content around Sequence and the lender itself. So definitely check that one out if you want to get the behind the scenes action from Sequence Capital. Christine, welcome back. Thank you so much for coming back once again.
Thank you so much, Dean and Jason. I'm glad to be back.
Awesome. So this is really cool. Like we're actually going to get into some tactical stuff that I think people not only can implement immediately, but will actually really help their business, especially folks that maybe, aren't focused on the private lending space or, for whatever reason, haven't focused on it. I think you're going to come out of this episode with some real tactical tips and things that will really help you. So why don't we dive in?
We talked about this a little bit, and I kind of think that for brokers, I just want you to kind of think about this analogy. It's like before you go out and find the love of your life, you got to kind of know yourself, right? And what you're bringing into the relationship. So you got to know everything about yourself and how you're going to be able to relate that to the person that you're going to meet. When you are looking to match with a lender, you have to know everything about your deal. You got to know all the ins and outs of the deal so that you can match right with a lender. And that means looking at property type. It means looking at the borrower. It means looking at the challenges with the file, the purpose of funds, all those things, the stories, the objectives of what's going on. So you really need to be handling everything on your end first to make that right match. And that's not including making sure you're doing the research on the lender.
It's a good point. I would say for some brokers that maybe aren't familiar with the space, they may look at private lenders as all kind of the same thing, same sort of rate range, same sort of fee, and that's kind of that. But where, we've had this conversation quite a bit, especially lately, there is some serious differences when it comes to niche products, lending areas, loan to value, size of loans. Yes, it may be just a 1-page or 2-page policy document or broker kit that you get that's obviously different from your Scotiabank broker kit, but there's some really valuable information on those, and understanding what those mean for your client situation is really exactly what we're talking about, matching to the right situation for the right client.
Absolutely. And when you look at a rate and fee, and again, when you're on private lending, you should be looking at a solution. That should be the main thing you're looking for. But when you do look at a commitment and there's a rate and fee, read the fine print. What are the renewal terms? Is it calculated interest only, or is it amortized, especially if people are having cash flow issues? What are all the fees in total that are involved in that deal? It's not always apples to apples. And then you also need to look at the actual lender, right? Who is the lender? What's their history of funding deals? Are they a mortgage investment corporation, or is this an individual lender that, Joe Blow down the street? So you got to make sure that you're also dealing with somebody very reputable, because your reputation's on the line as well. So make sure that, not only do you have the full knowledge of what you're bringing to the table when you go to that lender, but have you done your research on that lender?
Are you kind of seeing a lot more brokers reaching out to you to try to understand your space a little bit better? Is that activity of newer entrants into your space, is that picking up quite a bit for you?
Certainly there's a very high demand for private lending. I do think that a lot of brokers aren't taking advantage of reaching out to their BDMs as much as they should to get that knowledge. So I'm not seeing as many brokers trying to do the pre-research. They often get the file and then they're frantically trying to find the solution. So I would encourage brokers to do more of the research up front to make sure they're dealing with some good lenders. So when they do get that deal hit their desk, it's really easy for them to make a decision about where to place it.
Yeah, I know I sound like a broken record on these podcasts. Like I always talk about, it's so underutilized to reach out to people like yourself to really get a full understanding of not only the lender, but also the space that we're playing in. And I think, I don't know, for whatever reason, I mean, some brokers just seem to feel, nervous to pick up the phone. They're afraid to ask dumb questions, but you'd rather get those questions out up front than figure it out after you submit a deal.
Oh my gosh, 100%. And I would say that's one of the very key factors of brokers being successful in the private lending space. That was one of the points that I was going to bring up today, is that when you reach out to your business development manager, you're able to kind of deal with all the kinks and the gray areas before you get it in. Because underwriters can't really unhear the things that you've told them, right? Or when they see the docs. And if you don't have all your ducks in a row, it makes it very difficult for somebody to be able to issue a commitment. And they're still going back and forth and answering all the questions. So if you're able to pick up the phone, call your business development manager, in that case myself at Sequence, I'm going to ask you some questions, as the broker. And I do that not to drive them crazy, but I'm trying to do that to help them. So when the deal actually comes into our office, it already has a detailed quotation. We've talked structure, and I've had them go back to the client and present what that pricing might look like, as well as if they don't have all the information, they're able to go back and make sure they have a really clear picture before it comes into the office.
Yeah, like relationships, I think, are at another tier when it comes to private lending, because when you submit a deal to a private lender that you've never worked with before, as a BDM or anyone working behind the scenes at that lending institution or mortgage investment corporation, you're probably thinking like, okay, I don't know this broker. What's up with this deal? What's going on? Why is it coming to us now? Those are some of the things that a good relationship mitigates.
Yes. And I mean, certainly that would be doing that research ahead of time to get to know the lender so we're familiar with the broker. The other thing is when you do have a relationship with the lender, you're not kind of spamming the deal to everybody. There's a higher probability that that lender is going to make exceptions for you because you have the depth of relationship. You have the history of closing deals, you're organized, you're professional. So they're wanting to go to bat for you. And in the market right now, with property values coming down, files being more difficult, loan to values being high, a lot of hair on the deals, nothing's easy right now with files. So for the lender to go that extra mile, it certainly helps when we have that relationship. So I do encourage brokers to try and choose like a select group of privates and then a select group of mixed. And there is a difference between the two. And really right now, I would say that's more important than ever.
So I know you mentioned that it's important for the broker to do some research on the lender, but as the lender, if you're having new brokers reaching out to you, are you interviewing that broker to see if that person's going to be a kind of a good fit for someone for you to work with? Are you doing any sort of background on that broker prior to them being able to access or submit deals?
Any broker that comes to us, I mean, we have to go and make sure they're all properly licensed and there's no funny business about them before they come in. And they have to be licensed in the province where they're doing any of their deals. Otherwise, they have to coordinate and sub-broker with somebody that is. As long as, it comes down to the deal, right? We're not going to say we're not going to deal with anybody new. We're always looking to grow our business and expand our relationships. But certainly I like to have a conversation with anybody that's new to us because the deal comes in and the first question from our office is, have you dealt with this broker before? Do you know who they are? Especially if the deal's hairy, right? Why are we getting this? We see that the appraisal was already addressed to another private or MIC, so we know it's being declined by them, right? The loan to value is high. You can see on the credit bureau, numerous brokers have been involved in this deal. There's a lot of flags on this deal right now, red flags, as to why this deal may not be super awesome.
Yeah, and it's just like the pedigree to not only just get the deal closed, but also you have a track record of, are these actually good borrowers? They're good deals. They actually make their payments. They don't get into trouble. The story that was told is actually what's playing out. That's maybe where we can go with just like the key framework of some of these files is like AI is obviously so big right now, and it can really help you in processing and underwriting loans. But I see it as a hard piece to really disrupt this space, particularly because it is so story driven. Like, you really do need to know your client, the situation, ask the right questions, and then be able to portray that to the lender. Like, how important is like the story versus the financial picture?
I would certainly say on exceptions, stuff that aren't cookie cutter private. I know that's probably think nothing's cookie cutter with private, but the more hairy the deal is, the more we need to understand the story, right? If you're trying to push on loan to value, you got to understand what's going on with the credit, right? Because if it looks like they're not paying anybody, why the heck are we going higher loan to value in this deal? They're likely not going to pay us. So understand the story. If there's any challenges with the property type itself, right? Know that up front. If it's under renovation, if it's a industrial zone property, but it's a residential home, if it's a farm, like, understand what's going on with that property so you can explain that to us and have confidence when you're talking to an underwriter to mitigate any of the questions that they have. So yeah, it is important to understand all the different pieces with that deal. Who's your borrower? Like, are they a Canadian citizen that actually lives in this country, or are they a non-resident that's a Canadian citizen? So there's a lot of questions that you need to ask up front in order to be able to properly fight for that deal. You need to own it, and you need to be able to sell that deal. It used to be, when I got into the business, that you could kind of throw a private deal against the wall and it would likely stick somewhere. With property values coming down right now, we're in a market that's going down. The lender doesn't have an exit for sale right now. It's highly unlikely, if that goes into foreclosure, that they're going to be able to sell right away.
Yeah, and that was a big piece I was going to touch on, is just exit strategies. That was always the big thing. Like, what's the exit strategy? Like 5, 6, 7 years ago, private lenders, that's all they really wanted to know. What is the exit? And is the valuation there and the property's decent? Like, they didn't really care about the borrower's story or what their financial picture was. They didn't even ask for any documents. Now, like, I found brokers that are dabbling back into the private space that, haven't been familiar with it as of late are almost like jaded that you're asking for documentation, or, why do you want 3 months bank statements, or whatever the case is, because you're just simply trying to justify, like, suitability. Can they actually make these payments? Because it might be a 2-year term. Like, we might have this client for more than your typical short-term lending, which is what private lending kind of historically was.
Yeah. And that's why I think communication is so paramount with your private lender. So the acronym FEAR, which is future events appearing real, a lot of brokers live by that. So if their underwriter asks a question that they're worried might kill the deal, they just quickly go and call another lender and see if they can go get approval somewhere else, rather than communicating to their underwriter what they're concerned about and seeing if that's going to be a deal killer. Because quite often, we're all wanting to close deals. Your underwriter, myself, the whole company, we're there to place our MIC funds. So if it still makes sense to do the deal, maybe that condition is not required. Maybe if it's like a rate issue or a fee issue, maybe that can still be negotiated. So don't ghost your private lender. That's never a good idea. It doesn't build bridges. Try and keep that communication open. There will be a few more questions being asked right now. We are a lender that doesn't ask for income documents, but the story's got to make sense, right? We can't receive a file where it looks like we're not going to be paid, right? It has to make sense. Most privates, if it's a low enough loan to value, they'll give an advance or an interest reserve for payments because the equity's there. But at higher loan to values, you got to know the story and you got to communicate what's going on.
It certainly makes sense. What you're saying is when the underwriter's communicating back with the broker, like, that doesn't necessarily mean they don't want to do the deal. In fact, it's probably the opposite, is they see something here, but we just need you to pull out a little bit more information from your client to paint that picture correctly. And, I think that's where you got to look at the broker and the lender as kind of the teamwork. Like, what can we compile together to get this deal pushed across the line? Like, there's no reason to fear an underwriter asking you questions. That typically means they see something in the deal. They just might need some clarity on it.
Absolutely. That is so true.
Yeah,
right?
We've been really hammering that because, I don't know what it is. I think it's just, a lot of brokers are just getting back into the space because they have to. Like, being just, focused on prime deals and only prime deals is just not even a thing anymore. It's not even possible to be a successful broker if you're not, up to speed on what this space is and the need for this type of lending. And the questions that get asked by the lender when the deal's coming in, it's almost like frustrating certain brokers where it really shouldn't. And so we really wanted to hammer that point home because it means you're trying to do the deal.
We're very focused on trying to find a win. And that's why the underwriter's trying to pull the information out to help sell the deal to the fund. That's really what they're trying to do. So we are trying to make things make sense. And hey, at the end of the day, if it can't be done with us, we also want to move on. Right. So it's best to just tell us the full story up front.
Totally.
It saves everybody a lot of time.
Yeah.
Yeah.
So, I mean, this is a good segue. Like, the theme of what we were just talking about is really communication and, rolling into the 3 habits that win deals. Communication is number 1. So why don't we touch on that? Some really good points here and just how important communication is. And, you mentioned keeping the lenders informed. Like, what is an ideal broker relationship that you have when it comes to communication?
Well, first off, the broker's calling me up front so that I can help guide them, because it should be pretty seamless. Like once we've already chatted about the deal and they're sending it in, it should be getting approved, right? Unless there's something really funky going on with the appraisal. Staying up to date with the underwriter. Once they've got a letter of interest or a commitment, not ghosting them for a week because they've also decided to go shop 5 other lenders. Just staying in touch, let them know what's going on. If they're not happy with the commitment, let the underwriter know that. Just be straight up. We're all about building relationships. And if things aren't on track or there's something that doesn't quite work, let us know. It's so much easier to work with the lender you're already working with and get things changed than trying to recreate the wheel somewhere else, especially if you don't even know who that other lender is. So I would just keep that open. And again, most issues can be solved if there's dialogue.
Well, I think the big thing that I would take away from that is it's full transparency with your BDM, with your underwriter. Like, even if you guys discuss a deal and something changes, maybe the client omitted something that they didn't tell you at the beginning and you find out about it, it's better to be upfront and have that discussion with your underwriter and let them know of the change rather than hoping that it doesn't get found out or you're trying to squeak it through and then at the 11th hour, that comes up and then there's a big problem. So, full transparency, full dialogue. I mean, that's always the best way to go. And that's just going to avoid any complications further down the path.
Yes, absolutely.
Well, and the reality is like there probably is challenges. There probably is problems that you don't know about because the client maybe hasn't disclosed those to you for whatever reason or just didn't know to. Like, they're going to come up.
Oh, yeah. And our underwriters, the first thing they do is pull title.
Yeah.
Yeah.
Right?
Yeah.
What CPLs are on there? What's going on? What is the real story? Oh, I thought it was a conventional first. Oh, it's a private. Oh, I thought they didn't have a second. Well, there's one on here. Because we need to know what we're dealing with. And I would say to brokers, hey, it doesn't cost that much to pull title. If you're doing a private deal and it's looking a little hairy from the onset, pull title so you know what you're dealing with. It would be the same reason why you want to get an appraisal up front right now.
Yeah.
Is the equity even there on these deals to do them? So the more organized you can get up front, the better.
Yeah. And I mean, appraisal up front is a big piece. And, for a lot of folks are like, from a client perspective, there's no way I'm going to pay for an appraisal if I don't even know I have a deal. Well, there's ways around that. You can get a general idea of what the value is going to be from a realtor partner. If you have a good realtor partner, ask for a CMA like, hey, this client's in a private situation for maybe a number of reasons. Maybe this exit will be to sell. Like maybe there is some value add to like actually get a realtor involved and get a CMA. And then if the value's there, you can justify going ahead with an appraisal. But there is some legwork you can do before, putting too much time into this. And like loan to value's got to be like one of the number 1 killers right now.
Yeah, absolutely. Especially like on second mortgages. Every client still always thinks their home's worth more than BC assessed, and it's not often coming in more unless they did some major renovation. So you have to make sure you're not wasting your time because your time's valuable. Again, also if the client's not serious about paying for an appraisal, how serious are they about working with you?
Totally.
Yeah.
Totally. Okay, so habit number 2, looking at this from a pre-review perspective. So, you have a file. We talked about this. This kind of covers like some of the communication piece, but there's another piece here to really consider when you're looking at a file that might have to go to this space and preparing the client for this when it comes to structure, how these mortgages are different from a typical mortgage with a bank. So structure, term, pricing, the fact that there's a fee involved, things like that, like anywhere you would add on how to like really prepare a file, not just from a client perspective, but the broker's perspective ultimately that, sets it up for success from your side of things?
Well, they need to make sure, like even before they're picking up the phone and calling, they know who their client is, the real estate, the property, the purpose of funds, when the deal needs to close, and all the challenges going on. It's just going to save them so much time. What can somebody say on the phone when they call if they don't even have the property address and they don't really know what the challenges are with the client, why they're where they are? I mean, all anybody can do is give you a general idea. Rates are from here to there.
Yeah.
So it is important even on the private side. We do need to understand what's going on. The other thing is that sometimes these deals aren't a fit, right? Yeah. So let's just save everybody time. When you talk to most of your BDMs out there on the private side or the A side, they're an incredible resource. Use us.
Yeah.
Right? If we can't do the deal, we know all the lenders that can.
Yeah.
So we want to be in partnership with brokers, right? We want good, solid relationships. So if I know somebody that can help you, I'm going to steer you in the right direction.
I think you made a good point there too, Dean. It's about like preparing the client for what to expect. Like you could have the perfect deal, but perhaps you didn't tell the client what the pricing structure is going to be or what the fee was going to be. You submit that deal to the lender, they go, they underwrite it. And then all of a sudden you present that commitment to the client. They had no idea that there was going to be a fee involved or what the pricing was. Then all of a sudden you're getting the deal pulled from you. So I think that goes both ways. I think it's a very good point that not only should the broker prepare the lender, but also prepare the client for what to expect down the road.
Yeah, it needs to be an educational journey when you're in taking a client. You're going to get some clues right from the very first lead consultation call or discovery call, whatever you call that in your process. You're going to get clues right away that this might not fit because they're going to tell you their challenges of why they're calling you. And you should really start to plant those seeds of like where this might go.
Yeah.
It's probably not going to be a Scotiabank TD deal. It might not even be an Equitable Bank home trust deal. Like that, start to go down the credit curve and what does that impact look like? So they're mentally prepared. So they'll flat out tell you like, yeah, I'm not taking a private lender. I'm not paying that rate. I'm not paying that fee. Okay,
Absolutely.
Great. Like we probably won't have a solution for you. Let's just all stop wasting our time before it even gets to the lender.
Yeah. And clients, without that discussion, they are going to go into rate shock. They're
Totally.
like, what? I thought I was getting approved for a bank first. There's no discussion that didn't happen and they go straight to a private commitment. It is a bit shocking.
Your client experience becomes way more enjoyable for you and the client because then it is about a solution. You're celebrating the solution when you get the approval opposed to a very negative conversation that should have been very positive because you got the solution.
Well, it's our job to manage the client's expectations right from start to finish, right? So, and you don't do that without full transparency to the client and to the lender. So it always comes full circle and it's always around the transparency of it all.
Like this piece really covers like this third habit, which is like relationships over rate shopping is a big piece here. And having confidence in what you're selling up front in these types of conversations is really understanding, to your point, like back to the relationships with the lenders, knowing what you actually offer, knowing what deals might actually fit you versus the other lender down the street. That's going to vary.
And if it is a bit quieter, I know it's quieter for some brokers right now, take the time to
Great
go
point.
and find out who the lenders are that you want to work with. Like choose the calm over the chaos. Like don't wait till you get a deal and then not know who to send it to.
Yeah.
Do your research right now. Take the time to meet with the lenders, get educated on what they're doing, their process, everything else. So when you get the file, you know exactly what to do.
Yeah, I couldn't agree more. Like this is the time to spend that very important time with these lenders and building these relationships, building that knowledge base, building your own cheat sheet. Like we just hosted a speed dating event recently. We're hosting another one in Toronto next week. And what an opportunity to get in front of 10 lenders that typically all do something very different. Like, we really try to focus on making those rooms full of lenders that all complement each other in a sense. Of course, like you're all going to do the cookie cutter stuff.
Yeah.
But there's a lot of things that you do that another very big MIC wouldn't do, and vice versa.
Yeah, everybody's going to have their niche. Some lenders are able to react more quickly than others. So understand, like what everybody's doing because you'll need to know when that deal comes. Private lending is different than the A space. The reaction time is very fast. You need to be able to provide answers quickly, and deals are usually funding within a couple of weeks from you having the initial phone call with that client. And also you want to make sure that when you do have a file that you're not frantically trying to find a solution because you might be busy on a bunch of other files that week.
Yeah.
And also when we were talking about solution earlier is Private lending is solution based. So it shouldn't be where the broker's just trying to spam out the deal for the lowest rate. I totally appreciate that being the case on the A space, but is finding out the best solution. And sometimes that solution is making sure that it might be open, in a couple months, or fully open versus closed. Like, you need to figure out what's going on for that client to properly match where you're going to be placing that deal. And you don't have time to do that research when you need to get back to them within 24 hours so they can close on this deal really quickly.
Moving on to our next segment here, which is the pre-submission checklist, which is going to be a little bit of repetitive of what we just talked about, but a good reminder and a good flow to really hammer home some key pieces to really preparing yourself for success here. So, we talked about the relationships. The headliner here is know the lender. And, anything to cover there that maybe we didn't touch on already?
You do have to kind of date your lenders a little bit, right? Being a BDM, my role is to go out and see everybody all the time. Have to meet the people that are making the decisions right now to make sure that their deals are going to get pushed to the top for priority. So definitely go out and date your lender a little bit right now.
We don't talk about this much anymore. It seems like the industry's gotten better in this aspect, but be nice, be professional. Don't be short and emotional and an asshole when things go sideways with communicating to your lender partners. It should be obvious, and again, we've seen a lot less of that, but that was a kind of a thing back in the day where people would just scream at their lenders for whatever reason.
It's certainly a difficult market. Emotions are running high right now. People are going through challenging times, but we're okay. Part of our role as BDMs is part counselor, part sales. So we're happy to share, your challenges and be an ear to listen to. But yeah, being kind is never overrated. Remember, the lender that declines your deal today may be the one you need to call tomorrow to get your deal done.
Absolutely.
So don't burn bridges.
Yeah.
I think it all kind of boils down to, taking the time to get to know the lender, know the BDM. For the broker that says they're too busy and they can't have a bunch of individual meetings, then go to an association event. Christine, you and I were just at one last week where there are a bunch of lenders there. Does your brokerage do speed dating events that get you in front of 12 lenders at a time? Like, you really have to take the onus upon yourself to go and meet those people as much as possible. When you actually sit across and we can look at each other and talk, it humanizes that whole process. It makes it a hell of a lot harder for you guys to be mean to each other, assuming you like each other, of course. And that's just something that we need to do. Like, we can't just expect that, these relationships and deals are going to fall in our lap and everything's going to work out. Like, you have to know and have to understand and meet people.
And, you brought up AI at the beginning of the podcast here. And one of the things that's going to allow brokers to be successful in their space is the humanized aspect of the business. And so acting as a human being and not just being transactional, but getting to know people will be what gets your deal approved in a difficult market.
Oh, that's right. Totally.
Bar none.
Yeah, totally.
Yeah.
So the next piece here, again, we've touched on this a little bit, is just knowing the property. We had some good tips around appraisals up front, things you can do to mitigate, ordering an appraisal if the value's not there, such as realtor partners and whatnot, pulling title, you mentioned. There are things that get hairy on properties such as zoning. You mentioned like farm type properties. Anything around knowing the property that sticks out to you that maybe we didn't cover? Again,
like full disclosure, there's no point not telling your lender that the house is gutted or that it is a farm or that it's just land. Like, these are all things we need to know. If it's leasehold, right? If it's a partial interest that you're looking for, like, what are we lending on? Like, what's going on here? We're doing a second. Oh, okay. I didn't know the first was a reverse. We will go behind reverses, but mortgages. But we need to understand what's going on. So just full disclosure on that. It's also difficult to give full disclosure if the broker hasn't done the research on the property. So take a moment, especially for newer brokers. They get excited about a deal. They reach out, they're calling me, and I'm so happy they're calling me. But just take that extra moment to do the research so you understand what the property is.
And knowing the property could mean knowing the property portfolio, because there could be other properties that could be utilized as an inter alia depending on the situation. Like there's other aspects that could really help if there is a glaring issue with this property. Maybe there's another property in the portfolio that you could tag that can really make the deal work. So really understand the whole portfolio of properties, I think is key as well.
Very much so. It is your responsibility as a broker to understand all the assets and liabilities with that client for us to be able to properly assess the risk on the file. But very good point right now with values coming in low. Certainly if we're able to tag another property, that could be the difference whether the deal's going to get done or not. So sit down with your client, explain that, let them know and understand like why it is you need to know all their real estate holdings. First of all, for full disclosure to the lender, but also because it could assist not only to get the deal done, but in some cases it might provide better pricing.
Maybe the headliner here is more knowing like just the assets, knowing the whole story of what they actually have. Because, I was just talking to a broker who is experienced in leasing and realized that they were able to make a deal work by pulling out an extra $100,000 and redoing leases on equipment that the guy's company had that were all free and clear, trucks or whatever it was. Like there's so much you could do if you just put that extra effort into knowing the entire portfolio.
Right. So it's just taking that extra moment, making sure you're doing, your full analysis. And, I do have some checklists and things I've created over the years. So if anybody's wanting to kind of reference like a checklist of things to ask clients before they pick up the phone and call their BDM, it makes it super easy.
Oh, that would be awesome.
So I can share that as well. Yeah.
Hey everyone, Dean here. Quick timeout from the episode to share with you the AVW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show.
This is more around knowing the borrower. And again, we've touched on a few things here, but like understanding the story, getting the full picture up front, easier said than done than sometimes in the cases where, maybe borrowers just are hiding things or what have you. When you look at knowing the borrower, what are certain red flags that seem to pop up regularly on your end that you think could have been easily mitigated?
I think it's important for brokers to understand the challenges going on with the credit. So they do see, a pretty messy credit bureau. They do need to be able to sell the deal, right? So it's important to go back to the client and ask them what's been going on for them. Perhaps maybe they just went through a divorce and that affected their credit recently. But now, it's improving, or maybe it was a job loss for a certain period of time. So it's important to understand the credit. It's important to understand where the borrower is residing, because we often get files where the client's a Canadian citizen but hasn't lived here for like 25 years. They're not residents of the country. They don't pay taxes. Understand if the borrower is living in the house as well. If it is their primary residence, they're less likely to not want to make mortgage payments as opposed to a rental property. So really understanding that and understanding their exit strategy, understanding how they plan on getting out of private financing. As much as the lender wants to know how we're getting out of the deal, it's important to have that discussion with the client too. And I would even say to make notes on that in the file.
Yeah.
Because often you have a discussion with your client, you've discussed that this is going to improve their credit, we're going to be able to consolidate debt and be able to maybe look at options to get them back to B financing or the bank.
Obviously, we see the common theme in this whole segment is really understand the borrower and present those facts. And I think, especially in a market where it's harder to get deals and, brokers are excited and, the business isn't coming in as quickly as possible. They're so worried about pissing off a client by asking too many questions that you could always default that back to the lender and say, no, listen, I'm not asking it because I need you to do more work and like get all this stuff that I don't need. Like the lender needs it. And if they know the full picture, it's actually going to help you and put you into a better position. So I think brokers that fear asking their clients for perhaps additional things along the way and fear of pissing them off and maybe losing that deal, just manage the expectation, be the leader of the conversation and say, this is the reason I'm asking and it's for your benefit to put you in the right spot.
100%. It goes back to that acronym, right? It's the worry that if they ask the questions, that something negative is going to happen.
That's right.
Yeah. Mm-hmm. Great point. So this is a big piece, and I get this all the time, is just like the timing, leaving things to the last minute. We talked about like just some of the chaos that can happen from that perspective, but just know the timing and risk. And so like when I think about that, I think about closing deadlines. A big reason why people are using a private lender is like they just don't have enough time on their hands. There's maybe an opportunity that they need to seize with a property or what have you, and
Right.
or there's a deal in their business and they need to access equity quick, and that's really why they're going to the private lending route, and they'll refinance down the road or what have you. What are challenges that you see pop up surely around timing that again could be easily mitigated?
Certainly when the market's hopping with purchases, we see a lot of like fast closes and stuff like that. But there's still reasons that, maybe a lender needs to be paid out by a certain date, or you need money for a business opportunity. One of the things I find difficult to meet time expectations is when there's no appraisal done, right? We get a file and it's got to close in a couple of days, but there's no appraisal, right? It makes it hard. So it kind of full circle back, like that being one of the most important things, especially for private lending, when most privates, they don't ask for income documents. There's very few documents, but the appraisal is like the one thing, right? We really need to know a lot about the property and feel comfortable with valuation. So getting those appraisals done up front, I think is going to save a lot of time. And then again, being organized from the very beginning, getting all the facts.
Now, this was a big piece back like early in my career where private lenders only worked with very, very few appraisal firms. That's opened up quite a bit in the last 5 years. There's, lenders' list of approved appraisers is a lot bigger than it was, but there still is an approved list of appraisers. And I would assume that's the same with Sequence. Like when you're looking at deals and there is an appraisal already on hand, because the broker was trying to prepare and do the right things, but just happened to order from the wrong appraiser. One, is there an approved list? Where can a broker find that? And like, what is your suggestion in those cases where they have an appraisal and it's just an appraiser you're not aware of or don't work with?
First of all, we have a very generous list of approved appraisers in BC, Alberta, Ontario. It's pretty big.
That's a big
And then
deal.
even beside what's on our website, we have other ones that are in smaller towns that are not listed. But we do that to be able to be flexible. So if it has gone to like a B lender and they'll release the appraisal, then the client's not having to pay for it again, right? We're pretty flexible with that. My advice would be, again, if you are in a hurry, right, you got your top people that you deal with, there's a high probability that there's a few appraisers that are all on their list.
Yeah.
Right? So just go and get the appraisal done because you're in a hurry, right? Yeah. Leave the lender blank for now while you're still trying to figure it all out, but get that piece done. And then that way you're not paying for another appraisal.
Yeah. And, that's a good point. And like, when we would order an appraisal and prepare a file, we would always order it to be directed to us as the brokerage first and make it very clear to the appraiser that this will be used for a private lender or what have you. We will need to transmit a letter at some point. Giving them that up front is important because they will charge you if you're not clear on that. And so back to, the whole relationship building, having a relationship with appraisers is very important too.
Yeah.
Okay, so risk. So, we talked about just certain risks around property types, titles, zoning issues, those sorts of things. Property condition, I think this comes up a lot. And it's funny, like clients used to always say like, oh, the appraiser's coming by. Do I have to clean my house? Like, yeah, probably. Like you want it to be presentable, but like condition of property, how people take care of their property, those are all things that are very important to you.
The property's got to appraise in average or better condition, to be getting our best rates.
Yeah.
Because we want a marketable property. Brokers often, when you look on BC Assessed, it says property's worth $4 million and the house worth $5,000. That's kind of a big flag there that it's highly likely it's a land deal, right? No, maybe not. Maybe they renovated over the years and that hasn't been taken into account. As long as the property is coming back and it's in good condition, then there's still, a chance the private lender can still continue to look at it. Doing a bit of research on that up front would be useful because that is a big red flag, I think, on property condition. And also, talking to your borrower about what's going on with the property. Like, what's the purpose of funds? That's going to be an important one. Like if it was renovations and they're like, well, I actually gutted my house, this is going to be an important thing to be communicating to us.
Absolutely. And like how important is the economic life of a property? And like maybe they are taking the funds to redo the roof and, do the whatever it is, the drainage, the drain tile, or whatever the case is to kind of bring it back up to speed. When you look at economic life on an appraisal, how important is that?
Yeah, I mean, it depends on the location of the property as well. I mean, the more rural the property is, the more challenges there are, the less marketable it will be. We can do like a holdback or something like that to make sure these repairs are going to be done so that we're in good shape. Then less important. But right now, with there being so many properties listed for sale and not selling, the marketability of that property and the economic life is more important.
Yeah.
Yeah.
And, one thing that comes up quite a bit is you just mentioned it, like land value being the substantial piece of the valuation, where sometimes I see these deals go sideways as a broker's got development potential, but it's not captured in the appraisal because the appraisal was ordered for, a typical residential appraisal, and the lender might not even do land only deals. So like it's an immediate decline. So again, back to knowing the lender, like this is where it all comes into, relation to each other, right?
Is it a future valuation based on future development potential, which is a commercial file? And then if you are dabbling in that, like what stage of the redevelopment stage is it at with the city? For us at Sequence, we do focus just on residential files, so that probably wouldn't be a deal for us. But again, digging into that, getting all the information up front so you can properly do your research and find out who's going to take that deal.
And knowing there's no point of submitting that deal to Sequence or whoever the lender is because you know the lender and you know that they don't do that type of a file.
Yeah.
Another piece that came up that I noticed quite often is just around property condition. So foreclosures can be a bit of a gamble where, maybe it looks great now, but we all know the risks of foreclosures where, the last night they trash the house, take all the stuff out, what have you. How do you guys feel about foreclosures? How do you handle those?
So we will take on foreclosure files if the deal makes sense, that we're actually have some way of being paid, because we're not taking on somebody else's problem to immediately go into foreclosure. So it still has to make sense to us. So, is the client now in a position to make payments to be able to continue on? Is there enough equity in that property that we can allow an advance to the borrower because they've got the property listed for sale? It's a low enough loan to value, so we can help them out and give them that breather to be able to sell the house as opposed to having the lender sell it for them. So on foreclosures, I would say it's case by case, but certainly, again, we need a marketable property.
Yeah.
If the property is being trashed and it's already in foreclosure, it's going to make it difficult to sell that property unless it's a low ball offer.
Yeah, no, it's a great point. So I was actually more framing like the buyers buying a foreclosure property and just some of the risks that come with that, right? Like it may look great right now.
Right.
And then the person who's getting evicted that's getting foreclosed decides to go rogue the last night. And I've seen it happen, like crack all the pipes, like just completely destroy the house. So just risks involved in property condition that you might not see because they don't exist until later.
Yeah. And I think it's difficult when it's those court ordered sales because sometimes you don't even have access to the property.
Yeah.
That makes it really tricky. And I would say broker beware in those situations, because really until the lender's seen the appraisal, it's not a firm deal.
Totally.
Like before that, it's a letter of interest. The lender is basically advised, like based on the credit and your app, it looks like a good deal. This is what we want to do. But until they see the appraisal that's showing the condition of the property, the value and everything else, the deal isn't firm.
That's a good point that you bring up, though, too, is just if you're the broker of the client that's buying that foreclosure, I mean, that's a very viable risk that could happen that you just don't know, right?
Preparing for those scenarios, right?
Yeah.
As much as you can. And it really just comes back to, the topic we've hammered home today, communication, right? Just having excellent communication and preparation. So before we kind of wrap up, there's been some really big news when it comes to Sequence and a new product. I just want to take some time and focus on that. So maybe you can share the news and what this means for your broker accounts.
Yeah, thank you. We've been pretty excited. I mean, Sequence, normally we offer first and second mortgages, standard first and second mortgages up to 75 in BC, Alberta, and Ontario. And we just launched a home equity line of credit, first and second program. What is different about this than other privates that are in this space is it is fixed rate. So on a 2-year term that's fully open, we'll go up to $1 million and 75%, but it stays the same rate over 2 years. And people are a little bit nervous right now, I think, because the world is so chaotic. They want more comfort in knowing what their payments are going to look like, which can be a little bit challenging when you're on a private mortgage. It's variable, right? And with private lenders in the market, it doesn't go down when the rates go down. It's usually prime plus. And so usually you're just seeing the increase in those payments when they go up, which could be particularly challenging to borrowers, especially if they're in their private space. That could get really expensive and difficult to afford the payments. So ours is fixed rate. Borrowers know what that is. They're able to just draw on the money they want to borrow. I see a lot of like developer type clients that have built a home. They need to pay out the construction financing. They might want to buy another property at some point because the market's starting to hitting the bottom. There might be an opportunity to buy something else. They might want access to more capital, and they could kind of tap on that capital when they want. So it goes up to 75% and $1 million on a 2-year term that's fully open, fixed rate. And then we also offer second mortgage line of credit product that's at between $100,000 and $350,000 up to 65%. That's also fully open on a 1-year term. So it gives people more flexibility. It gives options. And I say for brokers, you want to have tools in your toolbox. Like you want to have different things to talk to your clients about as options to give to them. A lot of people are looking at, no payment options. You see a lot of people as well on fixed income, looking at reverse mortgage products and things like this. Maybe it's another option for them, right? To look at like a private line of credit option as well.
I mean, just some opportunities to consider would be like an inventory loan for the business, right? Like you don't know when you're going to need it, if you're going to need it, but the ability to just tap into $200,000-$300,000 to buy that extra bit of inventory because you're running a business that runs into those cash flow issues that from time to time on receivables or what have you. But also you mentioned you go behind reverse mortgages, and some folks are on reverse mortgages where it's the income approach, where they're supplementing their income, let's say $2,000, $3,000, $4,000 a month. So they don't actually take the balance from the reverse lender up front, where maybe it's not quite a bit because of the age restriction and they don't have the loan to value that they quite needed to get the enough to supplement the income, or they hit that threshold and they can't take any more out.
Right.
This line of credit could complement that as well, where you're taking bits out at a time and just really complementing what you already have with that income approach.
I don't know whether we would use the line of credit behind a reverse mortgage. It's a possibility, but certainly with behind the reverse mortgage, on that portion, there's no payment, and ours there is. So I always, with the brokers, do advise that they tell their clients they're going to definitely need an exit strategy because our seconds behind a reverse are only on a 1-year term. And so they need to make sure that that client has an exit strategy. It's often the case when people are looking to refinance a property and they're a little bit short and they know that the client's going to be in that next age threshold, maybe the following year, and then we'll be able to blend it all in with the reverse mortgage lender. It might make sense.
Yeah.
Where I find it a little tricky right now is that we're seeing property values go down and the first mortgage payment going up with those reverse mortgages. From a lender's perspective, we don't want to be in a worse position on these deals. So we got to be careful. So on those, it is only a 1-year term. So it is important to make sure you're putting your client in the right product for what their situation is. It's just like making sure you're finding, doing your research with the lenders and the products as well to making sure you're making that right match.
So with the HELOC, just staying on that for a second. So for a lot of folks, they go to private lenders for construction financing or large renovations. And a lot of private lenders do not offer construction financing for a lot of reasons. And like my understanding is largely the administration side of it is not the easiest.
Yeah, we don't either.
Yeah.
So this would not be a construction financing loan.
So not a supplementary product for something like that.
Yeah, no, we don't dabble in construction financing. It's not something that we want to focus on. But this certainly would be good for developers that have already finished and they got to pay out the construction financing, or for people that own multiple rental properties, right? They have all their equity invested, but they don't have a lot of cash flow.
Yeah.
And it's difficult to sell right now. If you're tight on cash flow, but you own a lot of real estate, being able to tap into that equity would be great right now to kind of get you through that hump until we start to hopefully see the market start to improve in the next year or two.
Just to wrap on the HELOC, like let's say I've established a HELOC, don't need it right now, 3 months goes by, now I need the funds. What does that process look like?
You just email our office and within 24 hours, we can release funds into the same account that we take payments from.
Excellent.
Minimum $5,000 draw. So it's a really easy process. It's all about offering options to clients. And that's what we want to do, like at Sequence, is have as many options on the residential side as possible and be as flexible as possible to our broker partners. If you ever find, like you brought up, for example, Oh, could they do a HELOC behind a reverse? It's a new program. I don't know, but maybe we can. Let me go back to the office. That's always my thing is how maybe we can. So let's go talk to our fund management team and see if it might be possible on this deal.
Yeah.
If it makes sense.
That's great. Yeah, the flexibility of being able to work with you, work through a new solution that maybe you and the fund didn't think of that does make sense, that you can be malleable too. So I love that. So in closing, we talked a lot about preparation, a lot about communication, a lot about relationships, knowing the lender, knowing the borrower, lender knowing the broker, all the things that are very important here to really highlight. Anything that, you think we maybe missed or want to cover?
I just think in our business, it is a very much relationship business and we all want to win. We want our brokers to be successful. We want our company to be successful. So, the more that human side of the relationship is, don't look at each deal as transactional, but try and focus on the relationship as much as you can. I would say you're going to be more successful as a broker if you treat your clients that way as well. You're building long-term relationships. It's not a one and done transaction. You're there for the long term. Think about your lenders that way too. Don't look at every relationship just as a transaction. Look at that lender being there for you 6 months, a year, 10 years, 20 years from now in your career supporting you. And look at building your relationships like that because I guarantee you're going to be way more successful than if you're just trying to quickly, get the best rate and just shove it down somebody's throat. So try and think about the relationships, and I guarantee you're going to be very successful in your business.
Well, I say this all the time too. It makes your job as a broker a hell of a lot easier when you have a good relationship. And if I'm comfortable picking up the phone and calling Christine because I know that A, she's going to take the call, B, give me good guidance. And, that just brings a sense of comfort to a broker knowing that they have allies and resources. And, we're fortunate. I say this all the time, but it is true. We have the best BDMs attached to a Better Way Mortgage Group that provide our brokers with so much support. I would venture to guess that they're a massive part of the success of our brokers' overall books of business. And, having those relationships and not just to your point, jamming a square peg in a round hole, trying to beat your head against the wall to figure stuff out, make the calls.
Yeah, you don't need to be alone in this business.
It's a lonely business and it doesn't have to be.
Yeah, it certainly can be lonely. And it's it's a great point. And yeah, so Christine, sequencecapital.ca is where to, find Sequence. Any information on Sequence is readily available there. You are the contact for Western Canada. Sebastian back east. So we'll make sure to include the contact information in the show notes for anyone that wants to reach out. Christine's very friendly, very willing to help, very willing to take your calls. So don't hesitate on that front. And thank you so much for coming back the second time. We really appreciate it.
Thank you guys. I appreciate having me.
Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Now, a message about something that means a great deal to us and to everyone at a Better Way Mortgage Group. City Reach Care Society is our chosen charity partner for 2026. For over 20 years, City Reach has been serving thousands of vulnerable individuals, children, and families across Greater Vancouver. They call themselves the Hope Business. When you see what they do, you'll understand why. Through their Food for Families program, City Reach provides fresh, nutritious groceries to over 4,500 people every single month. They partner with 54 schools across Vancouver, Surrey, and the Tri-Cities to make sure kids have access to food, hygiene supplies, and the support they need to thrive. Every August, their back-to-school blast puts backpacks filled with school supplies into the hands of 1,000 children heading back to the classroom. Here's what makes your support go even further. Every single dollar donated to City Reach translates into $10 worth of food for families in need. You can learn more, donate, or sign up to volunteer at cityreach.org. That's CITYREACH.org. Once again, thank you for listening, and we'll see you on the next one.